Hey guys, welcome back to another video, and today we're going to be talking about the S&P 500 and why I think we're possibly going to see around a 10% correction over the next coming few weeks. So the market's had a pretty crazy year. We had this massive sell-off in March, which then resulted into one of the biggest market melt-ups we've seen in the past decade. The market has just been melting higher ever since March, and we finally V-bottomed. So I'm going to go over what we could possibly expect to see in the price over the next few weeks, and overall where I think the S&P ends up going to over the next year. So shorter term, ever since we've gotten this flat ABC wave back here, the price has just been kind of grinding higher in a pretty tight range here, and it's actually starting to kind of form a rising wedge here. And this rising wedge is being formed right into this previous overhead supply here. So what I think is a very strong possibility and what we could see play out is potentially we just completely reject from all-time highs, maybe a few points below it, and the price actually breaks this uptrend line here, and we actually see a bit of a reversal. Or another possibility is that the price actually breaks over these all-time highs to run people who are shorting against them, and the price actually ends up breaking back below these highs, and the only purpose to really break over these highs would be basically just to run stops on short sellers. So where I think is a likely place we get a pullback to is actually the 38.2% retracement of this entire rally, and I'm going to explain why. So right now the 38.2% retracement sits right at around 29.37. I think there's a good chance if we do see a pullback here, which I think there's a very, very high chance we do get a pullback here, that we see a pullback to this level here that sits right at these previous consolidation lows here at around 29.30, which is the low end that the S&P saw when we were building out this flat ABC wave. So I think it's very possible we play out something like this where we actually see a kind of three-wave move down into this 38.2% retracement, and then I think you'll have a very good buying opportunity here for the price to actually build out kind of a bull flag and then break higher. Now once we do actually break over all these all-time highs, I think there's a very strong possibility we actually see the price head up to the 161.8% extension of its range that we've built out this past year, which sits right at around 4,100. I know it doesn't show on the chart, but basically that 161.8% extension sits right at around 4,100. So I think there's a very good chance we see 4,100 over the next year, but shorter term I am expecting around a 10% drawdown before that happens. Now let me explain why. So the last V-bottom we had was at the beginning of 2019. The price had collapsed in October of 2018, and it recovered completely all the way throughout 2019. So back here in 2019, we actually saw the price break over these highs, and then it actually fell back below the next candle, and then we saw a three-wave move down. This would be classified as an ABC wave in Elliott wave theory, but we got a three-wave move down here. And guess where it came into? It came in right into this 38.2% retracement, which at that time sat at 27.21. So I think if the market's moving off this 2018 fractal, that it's very possible we do see kind of a ABC wave down here that kind of builds out a bull flag, which then leads us to new highs. So another example why I think we see a drawdown here is also because looking back at the previous V-bottom before 2018, we have this 2009 V-bottom. So again, pretty much the same thing. The price came into all-time highs, and then we had a three-wave move down. This time it actually only went to the 23.6% retracement. This time it actually broke below that and then closed back above it, and then the price never looked back. So based off the significant V-bottoms that we've had in the recent past, it's likely to say that the price does see around a 10% correction here to at least this 23.6% retracement that sits right at around 3,100. I think it's extremely likely that we see this area, and I think it's even very, very likely that we actually even see this 29.30 area again. Again, any pullback here I'd be looking to buy and get long off of. Once we see a pullback here and we make a three-wave move lower, I think you'll have a decent place to get long against. When we get that second wave lower, I think you can just buy and put your stop below that low, and I think that'll be a great trade here. And I think it's very, very possible we do see something like this, where the price pulls back around 10 to 15% here, and then we see expansion in the price continue throughout 2021. Again, I think this is a very, very strong possibility that we see something like this unfold. Another interesting note here is that we have almost a historically low put-to-call ratio, meaning that there are a lot of upside bets on call options and not very many puts being bought at the current moment. So at the current moment, this basically means that most of the people who are in this market are looking for further upside, and usually markets do whatever will screw over the most people, which in this case would most likely be dropping. Usually every time the put-to-call ratio exaggerates in either direction, it either leads to a market top or a market bottom. And right now we're seeing historically low levels on this put-to-call ratio, that we haven't seen in a really long time. You know, on top of that, you have a market almost trading at around 29 times earnings. Again, I think this is all fuel to the fire, which is what's, fueling this market rally, and most likely will be what fuels the market to even lead us to around 4,100. But most of the shorter term signals do dictate that we do see a pullback here before the price actually continues to go higher. Once we get that pullback, I do think we march right to that 161.8% extension, which sits right at around 4,100. Anyways, that's my views on the S&P 500. I think shorter term we could see a little bit of a move higher, maybe past these all-time highs and then a break back below them. Or I think it's totally possible that the price even sees declines right below these all-time highs. And I think over the next 2 months we see around a 10% pullback to this 2940 area, and we do see a short-term correction. Now, the way I'm going to go around trading this and what I'm going to be looking for is I'm going to be looking for topping candles up here that I can then short against, and then that will give me a decent risk reward in the trade. So whenever we get really a set daily high up here, I'm probably going to short against that high, and then I'm going to expect further declines. Now, hopping over to the options chain here, I'm going to break down a trade that I think offers a pretty good risk-to-reward ratio. So I like these September 310 puts anywhere below 2 in premium. So the reason being is it offers you almost a 1 to 10 risk to reward in the trade. So let's say I think the market's going to drop to 2,940 over the next 2 months. Well, I can take these puts 2 months out, these 310 puts. If the S&P goes to 2,940, that would give SPY the equivalent of 294 in price. So these would be worth around 16 in premium. So any fill below 2.0 gives you around a 1 to 8 risk to reward in the trade. The reason I'm mentioning this is because options can be utilized to make a much greater profit than you otherwise would on equity. Again, you should keep your options account separate from your equity accounts. I'll most likely short this and take these puts, some in my options account, some in my equity account. But I wanted to bring this trade up because I think it offers a really good risk to reward. And yeah, I'll most likely take a pretty large size of these 310 puts. I think we'll see 2,940, and I think they can be worth around 16 in premium. I'll look to fill anywhere between 1.8 and 2.0 if we see it, and that's where I'll look to take a position on these puts. And I'll also be looking to short the equity once we put in that daily high as well. But yeah, anyways, that's my views on the S&P. I think we get a 10% pullback here over the next coming weeks, and we should see this 2940 level again. I think there's a very good chance we see it. Based on every V-bottom we've had in the past, odds sort of dictate that we do see some downside here, at least to this 3100 level. I think it's very likely that we at minimum see this. So again, that's probably where I'd look to trim a position if I'm shorting. So let's say I get short at around 3380 against whatever high we put in. Well, I'm going to look to cover half at 3112, and that's to reduce your risk in the trade. You bring the risk down by 50% in the trade, and I think there's a very high chance at minimum we see this level, and then you'll be able to ride the rest down to this 38.2% retracement at 2937. And after you trim the position, you can then raise your stop to break even, and it becomes pretty much risk-free. I would also look to trim my puts at that area as well, and I'd look to probably sell half of those, again, to reduce the risk down to zero. So yeah, I hope this video helped you out in some sort of way. If it did, make sure you leave a like and subscribe. And yeah, I'd really appreciate you taking the time out to watch this video. Thank you so much.